Hey super swing traders, I hope you're doing good. Today we're going to take a look at some charts and see where we can identify supply and demand order flow and trade it for income. Let's take a look at US dollar versus the yen and see where we can identify supply and demand and trade it for income, possibly. Let's take a look at the monthly first. On this chart, I changed it up a little bit. I'm doing monthly, weekly, daily, and 4-hour. But just keep in mind that you want to use only 3 time frames. If you use any more than that, too much redundancy. Alright, let's take a look at the monthly first and then we'll go down the line. So the monthly, we have supply up here, demand down here, and it created this supply zone, and it also created this lower range demand zone. So we have specific rules that tell us when it's supply and demand. Just because it dropped huge and made a huge move away doesn't necessarily mean that it's demand or supply. There's very mechanical rules that we have to follow, and that will tell us whether it's supply and demand. And then after you identify your supply and demand levels, you have to kind of rate it to see whether or not it's tradable and whether or not it's high odds or low odds. Okay, so that's what we have on the monthly. Let's take a look at the weekly. The weekly, we have a demand zone down here. Price did this huge bullish pin bar, and then so this level was responsible for pushing that price back up. And now we have this level of supply up here, and recently it created this level of demand down here. It's really actually right here. It's right here, but since it's so close to this, that I made this range lower. So we have price at monthly demand zone. It's been tested. Well, it's been tested at the monthly demand zone, and then it almost reached the monthly supply zone, and then it dropped again. So then it's trading within this range. Okay, so the weekly, looks like it's creating this area of demand, and it's looking like it wants to go back up. On the daily, we have price in an uptrend, and we have an obstacle on the way, which is this daily supply zone, but we're expecting price to break above this because the momentum has changed. It was in a downtrend, but now the weekly has created a new area of demand, and the daily is in an uptrend. So we're expecting this area of supply to be removed because it's not really that strong to begin with. So once this is removed, once this area of daily supply is removed, then we can go long on its pullback. So let's say it did this, and then it did this, then we want to go long right there. Okay, because once this level has been removed, and if it is removed solidly, and if it forms like a huge candle, then we know there's a lot of interested buyers down here. Okay, so that's the monthly, weekly, daily analysis. Monthly is to go long when down here, go short up here because it's just consolidating within this range. The weekly shows us that we're in an uptrend and price looks like it's going to reverse because it formed this area of demand down here, and daily prices in a uptrend. The price retraces down here were good too. Price retraces down here, it's pretty good, but ideally we want this area of daily supply to be broken, and then we go long right here. So this is a potential area of demand if price breaks this level and go higher and then retraces. Okay, so if you are trading the 4 hour, then you would ignore this monthly chart and just trade the weekly, daily 4 hour. So as you already know, the weekly chart shows that it's an uptrend. It's creating these two bullish candles and reversing the trend, and the momentum has changed to the upside. As we already talked about, the daily is in an uptrend, looking to break this area of supply. And this level here, is the same as this one. So like I said before, if it breaks above this trend line, if it breaks above this area of supply and retraces to this area, we want to go long. Otherwise, if price reaches this area and then drop, then we don't want to go long on this area of demand, because this supply zone can easily break this. If this is truly supply and there are a lot of sell orders up here, then it can easily break this zone. So we want to go long down here. So it just depends on whether or not this level is gonna keep price up or down, but we're expecting this level to be broken just because of the fact that this weekly demand area has been created. And whenever this area is created, the higher time frame is always stronger than the lower time frames supply and demand levels. So for example, weekly is an uptrend and it created this area of demand, then that means that it's most likely going to break this area of supply on the lower time frame, because there's really nothing here or up and to the left that's going to prevent, and there's no obstacles to the left that's going to prevent this from going up higher. So that is the analysis on US dollar. Some of the members from the community requested this, so that's why I decided to make it. And thank you very much for those that requested to analyze this pair. Going forward, I think I'm going to be analyzing the monthly, weekly, daily, and 4 hour, just so that you have more options in your trading, so that you can do more trades or trade more opportunities that shows up. Thank you for watching this video. Please remember to give it a thumbs up if you enjoyed it, and leave a comment below. If you're not already subscribed, please click the subscribe button below and click that little bell icon. That way you'll get notified of the next video that I publish. Thanks again for watching.